Hey traders, welcome back to this week's weekly Forex forecast. Last week was another good week. We did make new all-time highs in the cumulative returns of the setups that we send out to members last week. And we've started seeing in the last maybe 3 to 4 weeks really good opportunities coming into Forex. So looking for that to continue once again coming into this week. In terms of euro dollar, we start the weekly Forex forecast with euro dollar every single week now. And it has been a fantastic long opportunity. Going into this week, it is not one of my favorite pairs. The reason being because when we go through the portfolio selection very soon, you will see that both the euro and the US dollar are actually on the long side of my watch list this week. In other words, I want to be long the euro and the US dollar versus other currencies. So on balance, I am still bullish, kind of bullish to neutral on euro dollar. And you can see we've been outlining this channel that euro dollar's been trading in. And so for me to be interested in buying this on the dip, it would have to trade below the 1.15592. So if it does that, that's a channel breakout. And, that's going to essentially change the setup in and of itself. So the only real opportunity I see here, which could be a good one in euro dollar next week, is not a short, it's a long, and it would be an intra-week breakout. You can see actually very nicely, this market is trending down into the bottom of that channel. Now, when you have two kind of bullish currencies or, bullish to neutral currencies, you tend to see the markets chopping around and they're not fantastic for intra-week breakouts. So why am I pointing to an intra-week breakout setup in euro dollar? Because on Tuesday, we have UsdCpy. So even though both of those currencies are something I'm looking to be long, if we get a better than expected CPI print, in other words, CPI is lower than expected, this could very well catalyze weakness in the dollar, and that would be from Tuesday onwards. If you are looking at trading euro dollar, and again, I look at this every single week with you guys, but it doesn't mean I'm going to trade it every single week. And this week, I probably won't. I might do, but I probably won't. But the opportunity I would be highlighting is if you are trading Fibonacci, you're trading intra-week breakouts, is wait for CPI to come out on Tuesday, because this market will probably do nothing on Monday into CPI. And then if you get the counter trend break, you can look for the pullback, kind of bull flag setup. And the profit taking target next week is the 1.1809. This is where we become overbought during next week in euro dollar if we get there. And, depending on how it sets up, we may actually shoot straight into the top of the channel. And you can see this has been holding this very, very nicely recently as well. So that's what I see in euro dollar going into next week. It is not my favorite setup, but if you are looking at trading it, start to look at it from Tuesday onwards after CPI comes out. And if you're looking to be a buyer, you really want to see a softer or lower than expected CPI print. Okay, so moving on to the portfolio selection, and you can see the Swiss franc and the euro are once again my top two currencies to the long side. It's been like this for a while. I mean, think back to that euro dollar trend to the upside. Every single time the euro has weakened or the Swiss franc has weakened recently, I've been looking to be a buyer of those currencies to step in and buy the dip. So that doesn't change going into next week. I do still favor Swiss franc to the long side and euro to the long side as setups. What changes this week is last week I was looking to be short dollars. So if we get some strength in dollar, I'm looking to short it. And this week, although it is still bearish, it's actually getting stronger and it's bottomed. And if you remember, it actually came off of a low of 100%. And usually when you have a quantitative score of 100%, I said this to you guys recently, it marks a significant bottom. Could be, for a short period of time or even a major bottom. So it's no surprise that we're getting a strength in the dollar. Looking at this, I only want to be a buyer of the US dollar, relatively speaking. Given the chance, euro dollar would still be something I'd be looking at to the long side. US dollar Swiss franc would still be something I'm looking at to the short side. But going into next week, and this could change, in the following weeks, but going into next week, the third currency to the long side, although nowhere near as good as these two, so these two will be my primary focus. But the third currency to the long side is the US dollar. So to the short side, I'm going to be looking at the Japanese yen. Now, interestingly, if we start to see the dollar strengthen, very often we see flows coming out of the yen into the dollar and vice versa. When the Japanese yen gets stronger, we see the dollar weakening. So that makes a lot of sense. If we are quantitatively getting some underlying strength coming into the dollar and we could be seeing a near-term or a short-term bottom, I do, even if it's just short-term, want to be long dollars, and it makes sense that you know, the money would be flowing out of the yen. The second currency then to the short side is simply the New Zealand dollar. So, you know, New Zealand franc to the downside, Euro New Zealand to the upside, and New Zealand dollar to the downside. And of course, you know, franc yen to the upside, which has just been screaming to the upside. It's been quite difficult to buy dips in it actually, because it's just been such a strong market. But franc yen to the long side, we've had that, you know, on the long side for as a bias for quite a while. And New Zealand franc to the downside. And then finally the pound. You know, we have started to see some weakness coming into the pound. And as it currently stands, you know, really going into next week, I want to be looking to be a seller of pounds, relatively speaking. So we're also going to be looking at pound franc to the downside. We're going to be looking at euro pound to the upside, which is actually setting up a bit of a bull flag. And then also we're going to be looking at pound dollar to the downside in today's video. Kicking off with crude oil then, as we always do, you know, the price action in crude oil kind of got ruined on the Israel-Iran situation. It started to run up strongly, and we're kind of buying dips on the way down. And then we got the Iran-Israel ceasefire, and it just dumped. And, you know, ever since then, it just kind of contracted in volatility, hasn't gone anywhere. And now it's just started to make moves. So this is not one of my favorite markets going into next week. We look at it every single week. On balance, because the Iran-Israel situation is still, you know, basically on ice, I would still be looking for potential short opportunities in crude oil. I have mentioned in previous videos that there's no real resistance in this area because this was all part of the same kind of sell-off. We got the gap up and then we had the ceasefire and it just sold off. So it does make this, you know, not a top quality setup, but on balance, if we can trade into the sell zone next week, which is between these two levels. So the sell zone is simply where we become overbought during the week and extremely overbought during the week. And anywhere in this zone is where I'm looking for reversal patterns, be it to the long side or the short side. In this case, the short side. So if we trade above the 72.68, what I'm going to be looking for, because of a lack of resistance over here, I'm going to be looking for, you know, double tops, head and shoulders in this area. I'm going to look for momentum to fade. And then I'm going to be looking for that liquidation for 1 or 2 days back inside the range. If we end up above the 76.61, as I said, this is where we become extremely overbought during the week. It is a second place you can pull the trigger because a reversal is much more likely once you trade above this level. But the downside is you're only going to get there about 5% of the time. So this is more of a backup, more of an emergency level. We don't really, you know, look for initial setups from there unless we have, you know, an interest rate decision or something like that. So the third and final thing you can look for in crude oil as well is if you get the pullback and you start to make your way into the sell zone, but you don't quite get there, you can see we're already trending above the moving average. You can look for the breakdown. You know, the moving average here is kind of more or less just like a dynamic trend line. So the trend line is here. It breaks that trend line. The trend line actually starts to follow it and you get that pullback. And usually that first move is, you know, one of the best moves where it sells off, pulls back, and that kind of bear flag opportunity. You can see over here we broke above, consolidated, and then we start to rally. So you can look for that down to the profit taking zone next week at 64.81, but I do think there are better markets to trade next week other than crude oil. Okay, so kicking off the Forex universe with franc yen. Now, franc yen is a market I'm only looking to be a buyer of, and in last week's video, I highlighted this channel which franc yen had been in and then started to surf the top of the channel. So you see that when a market is really picking up strength. So we started surf top of the channel, kind of highlighted this potential pullbacks last week, and we started to rally. Now we're in this area where the top of the channel is providing excellent confluence with the buy zone next week. So what I'll be looking for is primarily, I'd like to see franc yen coming down, coming into the buy zone, which simply means that it becomes oversold during the week. So it's a market I'm looking to buy dips in, turns oversold below the 183.08, and then it trades into the top of the channel. So that's the bounce I'm going to be looking for. Bounce, bounce, you know, that's what I'm going to be looking for 1 or 2 day reversal back inside the range here. The second thing you can look for, as always, is that kind of intra-week breakout. So very much like previous videos where, you know, we're still kind of surfing the moving average. It might come back, kind of crisscross the moving average and not quite turn oversold. And then when you get that re-break and the moving average follows it, again, that's where you get that kind of bull flag setup. And the profit taking zone next week to the upside for anybody intra-week trading it is the 186.95. But this is the primary setup I'm going to be looking for next week. If for whatever reason, and I find this highly doubtful unless some kind of huge catalyst, which is unexpected, came out, unexpected, something that's not in the economic calendar, nobody's expecting it. But if that were to happen, then, and Frankian ended up back down here, which is the second place, I can look to be a buyer below the 181.14. That would also be something I'd be looking at. So again, a breach of the gold line. So we turn extremely oversold during the week, and then we bounce from the bottom of the channel this time. So this is kind of more of a backup. How many weeks previously has it tested its gold lower bound? None. This just keeps surfing to the upside. So I don't expect this to happen, but it is always there if we need it. Next is New Zealand franc. I can only be a seller in this market or do nothing. I cannot buy this market next week. So what I want to see is I want to see New Zealand franc pull back. We've got this kind of up move here and we're consolidating. So I'd like to see this continue, and I'd like to see us breach the 0.48425. And these are the highs right here that I'm going to be looking for price to trade into. Once we trade into these here, I'm going to be looking for buyers to struggle, looking for that false breakout, and I'm going to be looking for them to pull their positions and look for that 1 to 2 day liquidation back inside the range, because above the 0.4842, this is where we turn overbought during a week in a market that I'm looking to sell the rip. Every time it pushes up, I'm looking to short it. And once we enter the sell zone, the odds for reversal start to become quite high anyway. And when you add in potential resistance and attempted breakouts, this is where you really start to see those high probability setups. So that's what I'm going to be looking for next week. If we end up above the 0.49014, that is the second place I can pull the trigger, because we turn extremely overbought during the week. And the third and final thing is we start to make our way back. For those of you who like intra-week trading, we break back down, and you see very much like here, we're kind of chopping around it, we break down, and then you get the kind of bear flag sell-off into the profit taking zone to the downside, which is just simply the buy zone. Okay, but I can't make an initial buy on this market. I can only buy back in this area what I've already sold, right? But the profit taking zone or the buy zone next week for any intra-week shorts is 0.47247, and there's a really nice low here as well for timing any shorts intra-week. That'd be a great profit taking target to the downside next week. And the final franc pair is pound franc. Now, I can only be short this market next week or do nothing. Buying this market is not an option. Again, you can see this is channeling down quite nicely. And what I want to see is I want to see it pull back into the top of the channel. And going into next week, we have really nice confluence. I mean, once we trade above the 1.08433, this is where we turn over bought during the week, so looking to sell the rip again, so bounces looking to short it. And at the same time, we have really nice confluence on these prior highs, this one primarily, and the top of the channel. So if we turn overbought during the week and we trade into this area, this is going to be a great place to start to look for shorts. I'm going to be looking for 1 or 2 day liquidation back inside the channel. But it wouldn't surprise me if that actually marked, I mean, if we can get back up here, if that marked, the start of the next leg down, something like this. So that would be in subsequent weeks, but certainly for next week, I'm looking for that 1 or 2 day reversal. If we blast through the channel and we end up above the 1.09437, again, when would that happen? Really only if you get an unexpected catalyst. Sometimes without it, but it's quite rare. Usually you need an unexpected catalyst, and without that, I don't anticipate this going to happen. But above the 1.09437 is where we turn extremely overbought during the week. It's the second place I can pull the trigger on a short. And the third and final thing, because this is a nice weak market, if you pull back and you start to make your way to the top of the channel, and instead of taking out the upper bound at the 1.0843, you just break straight back down. You get that kind of intra-week breakout. You can look for that next leg down. In this case, probably into the bottom of the channel, right? You may go through, and end up taking out the profit taking target to the downside at the 1.06427. But if you want to be conservative, that kind of channel bottom down here would be a pretty good target for an intra-week short. If you want to hold, be more aggressive, look for the 1.06427. That is where we turn oversold during the week. Okay, moving on to the Euro pairs, starting with Euro Yen. Now, what I personally want to see next week is I want to see weakness. I want to see the opposite of what I'm looking for. I'm looking to be a buyer, but I want to see it dip. And the place at which it quantitatively dips is below the 170.38. This is where we entered the buy zone because it's where we turn oversold during the week. And then, the following week, these levels will update and they'll be new. So going into next week, anywhere below the 170.380, I'm going to be especially interested in. And there's two places here. We have the prior high, which is kind of this ascending triangle kind of high. And then once we broke it, we formed a couple of lows just here above it. So this kind of 169.90 to 169.71 is going to be a really good place next week to start to look for sellers to get trapped and looking for them in the buy zone to start to pull their positions, looking for that liquidation back inside the range. That's what I'm going to be looking for primarily next week. If we start to make our way down there, but we don't quite get there, you can look for that intra-week breakout and that kind of bull flag setup into the profit taking zone at the 174.25. This is where we turn overbought during the week, so it's a great place to book profits on any intra-week longs. And the extremely oversold level is down at the 168.44. Again, I don't expect this to get down here. Highly unlikely that it will get down here, but this would be the second place. In the event that it happened, I could pull the trigger on a long position as well. Next is Euro New Zealand. I can only be a buyer or do nothing with this market next week. Selling this market is not an option. We started to get some momentum down below the moving average, which is great because this looks like a bit of a bear flag intra-week. And if we can get a sell-off below the 1.9268, what's great about this market is look how much support we have. 1, 2, 3, 4. So if the market pulls back and turns oversold during the week, so this is the area down here that I'm looking to be a buyer. Look how much support sellers run into in an area where the odds are already turning against them in terms of a snapback. So this is going to be a great place next week to look for a 1 or 2 day reversal back inside the range. If we end up at the 1.9082, it is the second place. I can pull the trigger on a long position. This is the low I would especially be looking for, although it's quite deep. Again, don't expect this to happen. It's just on there as a backup plan. And the third and final thing is now we're below the moving average. We start to move back towards it. And instead, maybe we'll get stuck at these lows, right? Like this. And then you get the intra-week breakout. The moving average follows it. Then you can look for that bull flag setup into the profit taking zone at the 1.9641. And the final euro pair is euro pound. Again, I can only be a buyer of this market or do nothing. Selling this market is not an option for me. And the chart really speaks for itself. We've got 3 really nice pieces of confluence down here at the 0.8601. So first and foremost, most importantly, this is where we turn oversold during the week. Now, once we turn oversold and we enter the buy zone, you can see there's a stair step high. So we have a high, we break through it, we come back and stair step it. And these both reside right at the bottom of the channel in this market. So what I'm going to be looking for next week, I'm going to be looking for weakness primarily, and I want to see euro pound enter this area. And this is where I'm going to be looking for sellers to get trapped for a 1 or 2 day reversal back inside the range. The backup level is the 0.85380. If we were to break out and we get this kind of channel breakout to the downside and we were to trade below the 0.85380, there's a very good chance that marks the end and you get a snap back for 1 or 2 days. But again, don't anticipate these levels being taken out. Just keep them in your back. Just keep them in the back of your mind in case they are, especially if you get some kind of unexpected catalyst. So you get some kind of unexpected catalyst happens in the week, like tariff announcements or something like this, then you can go to, the second gold levels. The third and final thing, of course, is because we're trending up, maybe we pull back, we don't quite turn oversold during the week and we get a re-break higher. Then you can look for that bull flag setup. Again, if you want to be aggressive, you can look for the profit taking target, the 0.87289. If you're more conservative, you could just look at the top of the channel here with these 2 highs. So taking the bottom level, and just simply attaching it to the first kind of anchor point. Okay, so wrapping up the video with the US dollar pairs. Now remember, the US dollar as a long theme is not as strong as the euro and the franc. So I really do prefer euro and franc pairs over US dollar pairs. But if we do get a pullback in US dollar yen, I will be potentially looking to buy the dip. So remember, on Tuesday we've got CPI. If we get a neutral outcome, this tends to be how I play news events after they take place. Because beforehand, it's probably not going to do anything, and then it will probably start moving on Tuesday on CPI. So what I'll be looking for is if it's a neutral outcome, it's almost as if the event hasn't really happened, right? We might just get, some volatility up or down, but it doesn't really mean anything. So in that scenario, I'm going to be looking for a pullback in US dollar yen, just as I normally would be without any kind of event. So the 145.29, and it would be a stair step of this high, is where I would start to look next week for sellers to lack momentum, looking for that 1 or 2 day reversal back inside the range. You can see this market is just ranging. Unlike those franc and euro pairs, this market is not really trending, it's just ranging. So we're range trading it essentially when it turns overbought or oversold. If we start to pull back and on CPI, so we're breaking, chopping around on Monday, and then on CPI, you get a hotter than expected or higher than expected CPI print, that's when you get that rally. You can get that rally to the upside in the dollar, and you get that follow through, that kind of intra-week trade into the upper bound. Great profit taking target next week at the 149.46. And if we get a very bearish catalyst, so CPI comes out much softer than expected or much lower than expected, that's when you might want to just think twice about, buying the dip straight away. Because if it goes straight through here, like a hot knife through butter, you can very easily find yourself back down towards the bottom of the range. That's the 143.21. This is where we turn extremely oversold during the week. And again, is that likely to happen? Well, if we have a catalyst, it definitely can. So this would be the low. I would be timing any kind of sell-off down to the 143.21. And again, you might say, well, how do we know if it's going to stop here? Well, you don't necessarily. But if you get a really weak print, much lower than expected, then you just might want to be careful, sit on the sidelines, and at least look to see sellers lacking momentum first around these levels before you jump in. So those are 3 things you can look for next week in US dollar yen. We're going to be looking at all of the dollar pairs after CPI through this lens of these 3 opportunities. Next is New Zealand dollar. I can only be short this market or do nothing next week. I cannot buy this market. And very much like US dollar yen, you can see it's just ranging, chopping around. So again, it's a range trade. So we're not seeing those kind of trending markets with the really strong euro and franc pairs, but we can still range trade markets, especially once they turn overbought or oversold during the week. So what I want to see is I want to see the market pull back. And again, if we get a neutral outcome, I'm going to be looking for the market to pull back and breach the 0.60848. And I'm going to be looking at this high right here. That would be great. So we attempt to break out. We may even push through somewhat and, start to hold. But then I'm going to be looking for sellers to fail. And when they fail, I'm going to be looking for this to come back down for a 1 or 2 day liquidation. If we blast through and we take out the 0.6161, this is where we turn extremely overbought during the week. It's the second place I can pull the trigger on a short. And that would most likely happen if we were to get a very, very bearish outcome, so a much softer or a much weaker CPI print than expected. And a third and final thing would be that intra-week breakout trade after CPI. So that would be where you get a hotter or higher than expected CPI print. And New Zealand dollar is just doing this into the CPI print, and then it breaks down like this with momentum. And usually if you get that kind of a move, you usually get kind of one follow through or one bear flag opportunity in that week, in the 4-hour time frame. So the profit taking target to the downside is 0.5932 in New Zealand dollar next week. And the final dollar pair before we move on to gold and silver is pound dollar. I can only be bearish or short or take short positions in this market next week. I cannot buy this market. And unlike the other 2 markets, which were kind of ranging, this market is reversing. So usually you get markets trending, you get markets ranging, or you get markets reversing. And this is in the process of currently reversing by the looks of it. So essentially you'd be looking for that right shoulder. You see the much bigger right shoulder? So left shoulder, head, and then kind of a right shoulder over here. So what I'd like to see is I'd like to see this market pull back, especially if we get kind of a neutral outcome, or, maybe it's a slightly bearish catalyst for the dollar, but not super bearish. It's just a little bit softer, a little bit weaker than expected. And this pushes the pound up versus the dollar. Above the 1.3645, these highs right here, once we enter the sell zone, I'm going to be looking for that right shoulder. And I'm going to be looking for a 1 or 2 day liquidation back inside the range. Again, in that case, if you held it and it breaks the low over here, that's where third waves can begin, right? And this becomes the second wave, this becomes the first wave, and you get the third wave kicking once you break down below there. So I will only be looking for 1 or 2 day reversal because, it could come back, sell off again, could do this a couple of times before it breaks. So I'm looking for that next week. If we get a very bearish outcome for the dollar. We could see it back to the highs. And if we took out the prior highs and the 1.3781, I could step in and short this again here or take an initial short. But at that point, you know, the problem is we're trending to the upside then. You know, this is not reversing anymore. You know, once this makes a new high, this is going back into a trending market. Do I want to short a trending market? If it's extremely overbought, maybe. You know, it could be a good setup, but those kind of opportunities are not the best ones. So this is the prime one I'm going to be looking for. And as is the case with the other dollar pairs we looked at, if we just kind of chop around going into the CPI print and then we get a very, very hot or higher than expected CPI print, the dollar rallies, get the sell-off in pound dollar as the dollar strengthens. You look for that first kind of bear flag setup in this case, down to the profit taking zone at the 1.3340. Okay, so wrapping up the video with gold and silver. Now, usually if I have a bullish bias on the dollar, I'm looking for shorts in gold and silver, generally speaking. But, you know, talking earlier with portfolio selection, the dollar is not super strong, as we've seen. It's just relatively something I want to be on the long side versus some of the weaker currencies. But it's still kind of bearish to neutral. So, with that said, in gold, we are actually ranging between this high and this low, as it currently stands. And so instead of intra-week trading, which I don't prefer to do anyway, I prefer to actually trade, you know, overbought and oversold things. But I'm going to reactively look to trade the range either to the long side or the short side in gold. Not the case in silver. I do not want to be a seller of silver. And on balance, I don't really like shorting gold. You know, if given the choice, I'd rather buy gold than sell it. But based on everything we're seeing going into next week, I am prepared to look for a potential range trade to the downside as well. So here's what I'm going to be looking for in gold reactively. So I'm not trying to predict gold next week. What I'm saying is, if we start to pull down and we breach the 3274.75, we enter the buy zone, and sitting in the buy zone is the bottom of the range at the 3249.71. This is where I'll look for a bounce, 1 or 2 day liquidation back inside the range in gold. And if gold pushes up instead, so again, I'm not predicting which way gold is going to go. I'm actively looking to trade it reactively based on whatever happens. If we breach the 3414.07, there is a nice high here, but the ultimate range high over here as well is also good. So this kind of area, as soon as we start to push into this area, I'm going to be looking for the top of that range to hold, and I'm going to be looking for a potential 1 or 2 day reversal to the downside. That's what I'm going to be looking for in gold. And as always, you know, if we trade into the gold levels, these are the backup levels that I can also pull the trigger on an additional long or short, should I wish. And last but not least, we have silver. Now, silver has broken out of this range here. Here are the lows of the range, and the high of the range was here. We've broken through, and now we're making our way high. It's also channeling, and you know, that really means you've got a kind of more aggressive target, especially if you break through the channel and kind of move sideways and then continue. But I'm not looking at shorting silver under any circumstances next week. So what I'd like to see in silver is, ideally, I'd like to see silver come right back into the bottom of the channel, because below the 36.52, that's where we turn oversold during the week. And if we did come down and take this area out, this would be a great place to look for a bounce. The only thing I would say with silver is we have such a big move up. Are we going to, you know, pull all the way back down into the buy zone? Seems unlikely, to be honest, because of the amount of momentum. So, you know, if you are intra-week trading this, we've already broken above the moving average. You could start to look for that first pullback, you know, maybe to the 50% of this move here. And that would be the intra-week trade into the top of the channel, which is roughly the 39.50. And if you want a more aggressive profit taking zone, you know, definitely if we start trading to the 40.21, then that would be a fantastic place to book profits on any intra-week longs in silver. But I can only be long silver next week, whether we pull back or we just start ripping higher. I cannot sell silver next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-trading.com. hedge-.com. Access to the cutting-edge Hedge-platform is included with every GMT membership.